What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the supply distribution of Bitcoin. So the reason that we're looking at this metric again is because it's fluid. It's a fluid metric. It's constantly changing. And this metric has important ramifications on the market, both in the up and the down direction. And not only that, it has an important impact on the price of Bitcoin, both in the short and the long term. So this is a great metric. You could sit here and look at something like a moving average every week, but looking at something like a 21-week EMA or 20-week MA, that's not going to really tell you anything about what's going on. This metric gives you up-to-date data on what is going on the Bitcoin network. So when we see the coins flowing around, we're seeing a live snapshot of what is going on at this moment. And that's ultimately going to give us a lot of information that we can use in an actionable way. Because when we're sitting here at around 30K right now, if we were to head to the upside, and if you're new to the channel, let me quickly break down exactly what this metric is that we're looking at. This shows us the number of Bitcoin being held at any given price level, okay, on chain. So if the coins have moved on chain, they show here and we can see exactly where those coins are. Now that has huge implications for price analysis then, because if the price is moving up where, we're sitting at 30K, and if we were say moving up into the mid 30Ks, you see that there are a lot of coins sitting here. So if we just look here from 37K all the way up to around 41K, you see that there are a ton of coins there. Okay, so millions of coins sitting right in that range. And the same thing goes for right now. You can see that these green bars indicate that there are a huge number of coins sitting right where we're at. So that means a lot of coins have been acquired right in this time. Now, let's break down what the colors mean then. We'll start there. The red and pink are going to be older holders. So red is going to be someone who bought, obviously, when you look at where the prices are, you know right away, these are very old coins. So the red coins are going to have been purchased prior to 2017. Pink coins have been purchased after 2018. The yellow coins then have been purchased within the last 3 months, 1 to 3 months, and the green coins are less than a month old. So the green coins are the ones that don't really tell us as much. And they don't tell us as much because of the fact that since they're so new, we know that short-term holders are very likely to flip these coins at any given time, just statistically speaking, that is. And so these green coins don't really give us a lot of faith that we're, say, building up a huge support level here, because no matter what price you're at, you'll see this buildup of coins sort of flow around. So if we were to instantly go up to 40K right now, you would see a large swell of coins form right at that level that we were at, because short-term traders make up a large percentage of the daily volume. But at the same time, a lot of the coins purchased right in this range from about 32K all the way down to around 29K, that's obviously the price range where we've been oscillating dating back to the second week of May. So a lot of these may be short-term traders, but many of them may also be value traders, such as myself, individuals who are dollar cost averaging into the market, or some people may be lump summing in right now, just thinking that this is potentially the bottom. If it's not the bottom, they may know or believe, such as I do, that even if we go down significantly farther from here, this is ultimately going to be a buying opportunity in the long term. So what we're seeing now is, and this is sort of the risk that we're taking in the market at the moment. If you look where we're sitting at, we have a lot of coins right in this range here. So what you see here is that there are a few blips of pink coins here. And a lot of these are going to be individuals that bought back here in July of 2021. They bought this huge capitulation event that we had in May, or they would have bought initially at the start of the run. Now, what you'll notice is that there aren't many coins here. You see that there's only a few coins here. And in fact, if you go back onto some prior videos, there were some more coins back here previously. So that means some of these guys, as we've come back down to their cost basis, they've actually sold the coins, and these have transferred to new shorter term holders. There were never a lot of coins here to begin with, so it's not anything to get all worked up about. But what we see, and this is the concerning part to me, when you look below where we're at, okay, if you look all the way down basically into this 20K level, the story hasn't really changed. We are sort of at a vulnerable point right here. We are at a vulnerable point where if the market were to sell off, or if another black swan event like the UST event. And trust me, if you don't think that, there are any clear and present dangers out there in the market right now, I think you're fooling yourself, because that's why they're called black swan events. You typically don't, you're not able to predict them. You don't know that they're coming. And these black swan events, if you've ever noticed, they always happen in bear markets, and that's for a reason. So if these events happened in a bull market, they typically wouldn't affect the market in a majorly negative way, because sentiment is so high that sentiment can sort of steamroll right through any bad news. Or, for instance, UST happened in a bull market, or someone tried to do that in a bull market. People would have been buying UST in droves when it got down to 95 cents, for instance, thinking that it's going to go back up. So they could have simply outweighed the individuals trying to crash the price. And so that's why a lot of these black swan events happen in bear markets. It's because sentiment is negative and people are more likely to pull the trigger and sell assets when they're already worried about what's going on in the market. So in that sense, something like the fear and greed index, realistically, it's an index that's telling you what is the risk of a negative event occurring that has a negative impact on the price of the asset. Because when sentiment is negative, people are more fearful, and when people are more fearful, they are more likely to capitulate. People are less likely to capitulate when they are confident that the price will continue to go up. So that's why these bear markets sort of allow black swan events to crash the price. So that just sort of explains why things can turn sour when we're sitting somewhere like this down at around 30K. And the problem is, like we were saying, when you're down here, there's simply not a lot of volume below us. And volume or long-term holders are essentially going to act as your support levels. And right now we are seeing that there's essentially nothing below us, and that's not going to change. That's not somehow magically going to change unless we go down into those levels. Now, you'll see that there were barely any coins even purchased down in some of these lower ranges here when we did have the UST price crash, because we were down there for such a short amount of time that essentially anyone who did buy down at that price, they've more or less flipped their coins already, because they've made quite a decent profit, and in their estimation, we're going to head back to that price. And so this is the sort of risk we're facing in this market right now. There's not a lot of volume below us. Volume is, statistically speaking, going to form your level of support. So if the market were to start selling off again, and we're talking about the general market, or if any bad news came out in the economy, if we started to head into a recession, this is our big risk that we are facing as investors of Bitcoin right now. But ultimately, as we always say, if you have conviction in the asset, this would only then present you with a buying opportunity. Remember, we're not buying the asset right now. We're not buying at 30K so that we can sell. At least if you follow my channel and you've listened to anything I've been talking about, we're not buying right now to sell at 40K or whatever, anything like that. We don't care about making 30%, 40%, 50%. It's not worth it. If you want to make those kind of returns, go to the stock market. You're taking much less downside risk. You are taking extraordinarily high downside risk to participate in the crypto market, and you're doing it because of the fact that your upside potential is massive as well. And now Bitcoin is never going to offer you your maximum upside potential because it has such a large market cap. We know empirically speaking that Bitcoin attracts the majority of the asset flow into this asset class as a whole during bear markets. And then when Bitcoin goes on its runs, that is when altcoins will typically go on runs thereafter. So we've seen this. We've seen Bitcoin ever since it hit 69K. It's done nothing but go down, with only one small area of relief right here from January to March. But in that entire time, Bitcoin's been going down. The altcoins have been getting absolutely hammered. I mean, look at things like Solana and Cardano, okay? And that's ubiquitous. That's not just those two. It's pretty much any one of the top altcoins other than Ethereum. And why is Ethereum held up? And it's for the same reasons. It's because the market cap is much larger. It has many more individuals who are entrenched as investors. They believe in the asset. They believe in its long-term potential. And so that is going to provide you downside protection. But at the same time, Ethereum, it sort of falls into the same camp. You don't have the same sort of upside potential with Ethereum that you do with some of these other altcoins. And so when we're investing right now, we're thinking about Bitcoin because we want to hedge our investment. We want to protect ourselves from the downside risk, but we want to stay in this asset class because it's providing us such a huge upside potential. So what we're doing here then, this analysis is basically showing us that people are buying in this range, but there's no sort of huge movement of coins right now to suggest that there's a high amount of accumulation. Okay. So we've had this capitulation. Volume is sort of still pretty low, and we're talking about US dollar volume. So liquidity in the asset class, it's still pretty low. And we still have this risk right here. So if you are invested right now, this is your shorter term risk. And that is us dropping down into this zone here, us dropping down back to 25K, and then perhaps down to 23K. And then ultimately, if we got back down to 20K, I would certainly have more conviction that we're at least very close to the bottom, because this is where we have a lot of holders once we get down to that 20K level. I'm not going to sit here and say that we're definitely going down to 20K because, even in this UST crash, you saw people confidently step up at 25K and buy the asset. Not many of them, but you did see that people were willing to step in at 25K. And so that's one level of support we're going to have to look at right at this, 25 up to 26K. But below that, you have 23K, a very small level of support, and then all the way down to 20K. Essentially that's flirting with the prior all-time high from this market cycle back here. So that's what we're watching right now, guys. I think that's going to continue to be our primary risk, is this 30K all the way down to 20K. There's not a lot below us, but at the same time, all the way up until you get up to 37K, there's not a bunch above us. So, there's not a lot of resistance, in other words, above around 32K. So we could see the price rally up to around 37K. I think that would be a good place to be looking for if a relief rally were to occur, would be around 37K. If anything negative happens and things start to get ugly, I am looking for these price ranges around 23 down to 20K. So that's going to be it for this one, guys. Until next time, as usual, see you.